Hello and welcome to this Capital Magna Fund Performance Report Completion Training. This module will cover homeownership projects. We will start off our training from the home or the landing page of the Awards Management Information System, or AMIS. From the home page, we will navigate to the CMF Performance Report. If you do not see the applicable performance report listed in the list here, click the Go button, which will retrieve a full list of performance reports associated with your organization. After clicking the CMF Performance Report link, we're brought to the Performance Report Detail page. Now, before creating our first CMF homeownership project record, we should start with the Housing Program link. While it is not necessary to create a housing program in every situation, it is a functionality or a tool that allows you to group or link the individual homeownership project records. This may be useful, for example, when you are using your award for two different activities or uses. So for instance, with this $1 million award, let's say $500,000 was being used to provide down payment assistance to first-time homebuyers, another $500,000 for repairs for low-income homeowners. We could create two separate programs and link the units to those programs, respective as to if they are down payment assistance or home repair. Additionally, the housing program feature is useful or can be useful with reporting compliance with your commitment requirements. All CMF recipients must have the CMF award 100% committed for use by 2 years after the effective date. So if your organization, pursuant to the general waiver and the instructions outlined in the assistance agreement, if you are committing your funds to an affordable housing fund or a loan loss reserve via a board resolution and that alternative commitment guidance, then you can report that commitment here on this page to your housing program or the housing fund rather than to each individual homeownership projects. Well, you will still report the commitments made at the individual unit or transaction or homeowner level. You can report 100% commitment of the award through this housing program. If you have any questions about the commitment requirements and committing to a housing program or fund, starting in 2018, you will find information on that in section 4.2 of the assistance agreement, alternative forms of commitment. There is also on the CMF compliance section of the CDFI Fund's website, the general waiver that was released by the CDFI Fund. So now that we have our housing program in here, we will go ahead and indicate that as of September 1st of 2021, that half of our award, we'll just say $500,000, was committed to this housing program. Now that we have created or at least updated our housing program, we will return to the performance report and proceed by creating our first homeownership project record. You can click or hover on the project's link and then click New Project from the Record Type dropdown, select Homeownership Housing, and continue. The first step will be to provide a unique name for this project record. For our example here, we will just indicate that this is House 1. Once again, we recommend you use a unique name for the record or a unique identifier that your organization has for each transaction. While you may use an address, please do not use personally identifiable information or PII, such as the homebuyer or homeowner's name. If you are a 2018 CMF recipient with a requirement to invest in a disaster area, and this housing unit is located in one of those areas, go ahead and check this checkbox. Moving along to the project details section, first step will be to select a project type. So there are a number of options. Select the one that is most applicable to this particular investment. For this transaction, we will be involved with down payment assistance. And the primary financing type is going to be a permanent finance or first lien. If you are a 2016 recipient, due to some separate tests related to homeownership investments, select the available project type from the menu here and use the arrows to add or remove those project types from the chosen box. For this example, we're working with a 2017 award, so we will leave that information blank. Next, select the income category for the household or the home buyer. In this case, we're dealing with a low-income household, so someone that is at or below 80% of area median income, and yes, they are a first-time home buyer. Our housing program that we just created or edited, we will go ahead and hit the magnifying glass, which will pull up a list of the housing programs. We only have one, but we will go ahead and select that housing program to link this individual homeownership project record to the housing program. We'll come back shortly to the sale price and the sale price limit, but moving up here, optionally enter the number of construction or non-construction jobs created. This likely won't be applicable if you are just providing down payment assistance to a home buyer. However, if you are using your CMF award and the development of a single-family neighborhood, for example, these fields may be applicable. You are required to enter if other CDFI fund program funds are being used in this investment. In this particular case, the answer is no. Next, indicate any other federal sources of funding beyond the Capital Magnet Fund Award, so you don't need to enter CMF here. But for our example, there are some home dollars involved in this transaction. So we'll enter home, and there will be 5,000 home dollars ultimately invested in this project. Optionally, these are new fields. You can enter homeownership if they are Hispanic, and then race as well. For our particular example here, we do not have race and ethnicity information available. Moving along to the project dates, those will be entered on a later page and ultimately show up here on this record. So for the uses of CMF award section, although we earlier just committed the $500,000 commitment to the housing program, we still need to indicate how much of the CMF award is being committed, or at least ultimately forecasted to be invested in this particular unit. So for this home, we will be making a $15,000 CMF commitment. If there is any program income that is being invested into this project, then those amounts can be entered here. And next, we will move into our eligible project cost sections. The first section is for recipient level leverage and enterprise level leverage. So if you are a 2016, 17, or 18 recipient, you will be using the recipient level leverage field. If you are 2019, 2020, any future award years, you will be using the enterprise level leverage fields. And keep in mind for our project costs, we're just working with projections at this point. So if you don't have final numbers or the transaction isn't complete yet, that's fine. Actual or final numbers will be entered on a later page. But in this case, because we are providing down payment assistance, we're pretty certain of all the cost up front, and the time frame between when we commit the dollars to the eligible family and when they close and the project is considered complete, it's a pretty short window. So we happen to have most of our cost available up front. So we are working with a 2017 award, so we will work with the recipient level leverage field. Recipient level leverage consists of the CMF award, program income, and additionally, any enterprise level enterprise level leverage, which is capital from your organization that is not committed or set aside for a specific project at the time it is raised or earned. So if you have any questions about what does or does not count as recipient level leverage or enterprise level leverage, feel free to reach out to the CDFI Fund for technical assistance. For this specific example, the $15,000 CMF investment is the only source of recipient level leverage in this investment. So we will enter the $15,000 CMF investment here in the field, and we will ignore the enterprise level leverage field because we are not a 2019 or 2020 CMF recipient. Next, we are going to enter project cost. First, project costs must be broken up into eligible and non-eligible. And of the eligible cost, those will then be broken down once more into private and public sources. So for those of you who have reported for CMF before, there are a few less fields here. There used to be related and third-party public and private fields. Those have been eliminated, reduced for easier reporting. So in this particular case, our total project cost are $160,000. The home is $150,000 and there's $10,000 in closing cost. All of those are eligible project cost. So we don't need to worry about entering anything in here. Well, it's not required. We'll enter 0. We have no non-eligible cost. Of that $160,000 in projected eligible project cost, $140,000 will be coming from the local credit union or the local bank in town that's providing the first mortgage. And then the other $20,000 will be from public sources. We have a $15,000 CMF investment and another $5,000 in home funds. So we'll put the $20,000 here in public dollars. You may notice that we are reporting, in a way, the CMF dollars twice. So yes, the CMF dollars do go here in recipient level leverage, and they also go here in the eligible project cost public dollars. So that is correct to report the CMF in both of these fields. Next, we will enter an address for this project. This particular project happens to be at 1003 South 9th Street in Omaha, Nebraska. While these fields on the right for projects at location, XY coordinates, and FIPS codes, while these are editable fields, please leave these blank as they will be system generated automatically, generally within about 48 hours. Finally, here at the bottom, there is a project impact description, which you can optionally fill in. Mentioned earlier, we would come back to sale price. So let's go ahead and do that for our property here in Omaha, Nebraska. So as mentioned, the sale price of this property is $150,000. There were another $10,000 in closing costs, but the contract price is $150,000 for this particular property. Next, we need to enter the 95% median sale price limit. So there's a requirement for capital magnet fund, homeownership investments, that the sale price, or in the case of a owner-occupied rehab, that the value of the home not exceed 95% of the median purchase price as defined by HUD in the participating jurisdiction for the locale. So to find out what that limit is, we will navigate to the HUD website under the homeownership value limits. And this particular transaction is moving forward in the summer of 2021. So we found the limits that are effective as of June 1st, 2021. We click that link and open up the respective spreadsheet, navigate to Douglas County, which is where Omaha, Nebraska is located. We will find the purchase price limit of $180,000. You'll notice in this spreadsheet there are two sections, one for existing homeownership units and another for newly constructed homeownership units. Within both of those categories, there are also different limits for a single family home versus a duplex and up to 4-unit structures. So for this particular case, the home is an existing unit and it's a 1-unit single family residence. So we will report that the sale price limit is $180,000. Returning to Amos, we'll put that 180,000 in here. And now that we have completed all required information, we will go ahead and hit save. Make sure there are no errors with saving this record. And great, we get the indication here that the project record has been saved. Optionally, you can go ahead and scroll down through the page to review the information that you've provided. Related to the address, there are a number of geographic tests, such as required investments in rural areas or metro, non-metro, in addition to areas of economic distress that may or may not be applicable to your organization. But the system must geocode an address before that information will show up. So here you can see in this geocoding status field, this particular entry is scheduled. So at this time, the geographic information for the particular property is not available. The system generally will run that geocoding process a few times a day, and that information will populate once available. If it turns out there was perhaps a mismatch between your zip code and the city, or just an error, some sort of issue with locating a particular address, you will receive a message here with some error information. If you have a particular record that is not geocoding for some reason, please submit a service request or otherwise contact the CDFI Fund for technical assistance. So we just created our CMF homeownership project record. Most of that information is static and will not change. As you may be aware, there is a requirement for each CMF homeownership unit to be affordable or remain affordable for a 10-year period. So because of that requirement, you will be completing an annual report on each CMF homeownership project. So if we have come to the end of our reporting year and we're ready to go ahead and create that annual report from the project record here, we can hover or click on the CMF project annual reports link or button, and then click Create New Annual Report. You'll see another option here to create blank annual report. As none exist, both of these will have the same functionality, but if we were in year 3, for example, and you click Create New Annual Report, it's actually going to clone the prior year, and then you can just make updates as necessary. As most of the information you report in these annual reports, we want to carry forward from year to year and just have that information updated as applicable. So let's proceed with creating our annual report for this project in Omaha, Nebraska. First, we will indicate if the unit is either an investment period or affordability period. Basically, if the project is complete, it has been placed into service, then the 10-year affordability period has started. If that's the case, you would report affordability. If the 10-year affordability period has not started because the project is not complete and not placed into service, you would select investment. For this particular case, the unit is complete and the family moved in. So for CMF purposes, the unit's placed into service, so we will report it as affordability. For the project status, we will then indicate placed into service. Next, we will proceed with entering all applicable project dates for this unit. First, for the date funds committed, we'll just say the funds were committed to this particular household or family on September 1st, and then they were scheduled to close 1 week later on September 8th, 2021. So we committed the funds on September 1st, and then September 8th, the funds, the initial and full disbursement of the funds took place. The family closed on their home that same day, moved in, took title to the property. So we will also report it as complete, placed into service, and initial occupancy all on September 8th. If you're providing down payment assistance to first-time home buyers, it's very likely that many of these dates will all be the same. Well, in the project record, we reported that $15,000 was committed to this individual project. Here on the annual report, we will indicate that that money was actually dispersed for this project. So here in the total CMF disbursement amount through fiscal year end, we will go ahead and report that that $15,000 was dispersed to this project. Those funds were dispersed in the form of a grant. Because of that, we are not required to enter an interest rate or origination fee. Had this been debt or multiple, those fields would be required. Moving to the right, we will select the eligible activity. This particular case happens to be capitalized in an affordable housing fund. This dropdown is explicitly tied to the eligible activities that are approved in your assistance agreement. So be sure that you reference Schedule 1 of your assistance agreement to be sure that the eligible activity you are reporting and you have invested in matches up with what's approved in your assistance agreement. If you indicate something here that is not approved, a non-compliance will show up on your scorecard when it comes time to submit this report. Next, we'll move down to the program income section. In these fields, if you had made that $15,000 investment and the home buyers moved out in a couple of years and repaid some of that money, that would be reported here in the program income earned fields. Alternatively, if you had dispersed $15,000 of program income for this particular project, rather than that being the CMF award, it was actually program income, that $15,000 would be reported here as a disbursement of program income rather than a disbursement of the CMF award. Next, we'll move into the eligible project cost section. Once again, we reported projected cost on the project record, but now that we have final cost, we will report those here on the annual report. As this is a 2017 award, we will enter recipient level leverage rather than enterprise level. And the only thing that's going to go in here is the $15,000 CMF investment. Same as our projected cost, total cost ended up being $160,000, $150,000 home, and $10,000 in closing cost, all of which are eligible. So we will report 0 for non-eligible costs. That field is optional. As a reminder, $140,000 in the form of a first mortgage came from the local bank or credit union. So we will report that here in private dollars. And then for public dollars, once again, we had the $15,000 CMF investment and a $5,000 home investment partnership program investment for a total of $20,000. We'll proceed by hitting save and ensure that no error messages reflect here on the annual report. We receive a message that everything has been successfully saved. And I always recommend just scrolling through your entries to validate for accuracy of the entries. With those annual report entries, you will see that much of that information has now rolled up to our project record. So looking at the project cost, for example, you can see here on the left, we have our projected cost Here on the right, we have the final cost. If you are providing purchase assistance and a few other instances, you may not be required to fill out these projected fields on the project record. You may only be required to enter the actual through the annual report. But for many record types, both the projected and the actual cost will be required. Navigating back to the CMF performance report, here under the custom links section, you will notice a homeownership report. So as you continue to enter more and more CMF homeownership projects, you may find this report to be helpful for both reconciling the information you've entered or tracking down any errors or misinformation that's showing up in some of the performance tests. So if we click that link, download the Excel file, click through any messages that may pop up, you will get the homeownership project report. We only have one row here because we've only reported on one project, but you'll see that all of that information that we just entered, it is now here in an Excel-based format. Returning back to AMIS, if we look at our projects list, you can see we have our first project, House 1, and the green checkbox indicating that we have created an annual report for this unit for the year. If you choose to continue scrolling, you will be able to see how your organization is performing on a number of compliance tests. For example, we entered private and public dollars. So far we've achieved 1.5% of our required private leverage requirements with this one particular project. You can continue to look at the rest of these tests to see how your organization is performing on these various benchmarks. If we only have this one project to report on for the year and we're ready to submit our report, here from the performance report detail page, you will next click Generate Scorecard, which will provide a high-level summary, generally pass, fail, or monitoring not yet due, as to how your organization stands on a number of benchmarks. You can see for this particular example, the organization is not approved to capitalize an affordable housing fund, but they are approved for loan loss reserves. We reported that this project was to from the capitalization of an affordable housing fund. As a result, a failure is popping up here, and we must continue by either correcting the information we reported or providing an explanation of noncompliance. Because our project is not yet it is not registering with the service area. So assuming that the state of Nebraska is part of this organization's approved service area, this should be a pass. But because that unit has not had a full 24 hours to geocode, the system doesn't know that that project is in the approved service area. So this is showing up as a fail. What this means is that you should always enter your projects and make the entries with ample time in advance before the performance report is due. If you are entering project records and addresses the day the report is due, you will likely come up with this designated service area test returning a fail. If we choose to continue with submission of this report anyway, we will complete all of these non-compliance fields. And finally, we are ready to submit the report. Once you hit submit, the report is logged until reviewed and approved by the CDFI fund. And once it is approved, it will roll over to the next reporting year. So you can see here, we are in reporting year 2020. So once this was submitted and approved by the CDFI fund, Once it is unlocked again at that point, you will be in reporting year 2021, and you can then at that point enter information for the current reporting period at any point you would like. So this concludes our training on ownership projects. We covered how to create a homeownership project, how to create a housing program, link a homeownership project to a housing program, also how to complete the annual report for homeownership projects. If you have questions about how to report a replacement homeownership project in the event that a homeownership unit is sold or otherwise needs to be replaced, as it will not fill the full years of affordability, a separate training will be provided on that. We'd also like to point out that a comprehensive reporting manual is available on the CDFI Fund's website, on the CMF compliance section. Additionally, if you have questions, we highly recommend that you submit a service request through AMIS, selecting Capital Magnet Fund for the program activity. You will find instructions on submitting the service request and the client reporting guide. Alternatively, feel free to reach out to the CDFI Fund at either or any of the email addresses and phone numbers listed on the page. Once again, we thank you for your time and participating in this training. Thank you.